people's perceptions of the future are shaped by recency bias. And the last 40 years, as you suggest, have been very benign, a period where we benefited from declining interest rates for 40 straight years, which meant lower cost of capital, higher bond prices, all that kind of thing. But we also benefited from restrained growth of government compared to the period before that. Maybe not for the last 10 years, but certainly for the 30 years before that. I'm not trying to say that government didn't grow. It just grew at a less robust rate than it had in the 50s and 60s.
Wow.
We benefited from increased trade worldwide. Now, some people don't like increased trade because it threatens their own livelihood in home markets, but it certainly makes everybody richer. And we benefited, too, from reduced international tension. I think, the Cold War is an example, U.S. versus Russia, all that kind of stuff. I think when you look at where we are today, what you'll see is that, although I don't want people to run and hide under their desks in terror, that benign 40 years is over. It's very difficult to take interest rates below zero. Negative real interest rates don't last because if that happens, you get no savings whatsoever, a circumstance which we're coming into. I think, too, that at least in the United States, the idea of restrained government growth was over 10 years ago. And government growth, the growth of government, is returning in earnest, which, while it may be good for government, is not good for you and I. We're seeing increased nationalistic tendencies and a reduction in international trade. Witness, as an example, your country's new relations with China, which serves to make people in both countries poorer. And I would suggest, too, that we may be nearing the end of reduced international tensions, the realpolitik around the Chinese bloc, problems with the Russians. One would suggest that perhaps the benign period in every regard that we've enjoyed in the last 40 years is closer to the end than to the beginning. As it relates to gold, what's particularly important is the trend in interest rates. A circumstance where interest rates go down at the same time that confidence in the currency stays up is the worst of all possible worlds. But one wonders how far below zero interest rates can go. In my experience, Carrie, as I've told your audience before, precious metals move primarily because people are concerned about the purchasing power of their savings, denominated in conventional instruments. And nothing could make people more concerned about the purchasing power of their savings than a negative real interest rate. I've bored Australian audiences with this before, but I have to do it again because it's a number I know. The US 10-year interest rate is 1.6%.
Okay.
In a currency that the US government acknowledges is declining in purchasing power by 6.5%. So the arithmetic is simple. Take 1.6 minus 6.5. The US government is guaranteeing that they're going to cost you almost 5% of your purchasing power a year for 10 years.
Which is closer to 60%.
This will take its toll, and people will come to understand this, and people will come to be, at the very least, concerned about the purchasing power of their savings denominated in conventional instruments. I remember reasonably well the period 1967 to 1973. In the United States, we had the hubris to decide that we could win the war in Vietnam, which we didn't, and we could win the war against poverty, which we didn't. But the consequence of fighting those twin wars meant that we had very, very, very high deficits, and it was politically inexpedient for us to raise taxes. And the consequence of that was that we debased the US dollar. It took 6 years of that bad arithmetic, the period 1967 to 1973, before the citizenry stood up and took note and began to sell their bonds, began to look for savings instruments that paid better than passbook savings, and importantly, bought gold. When the narrative took hold in the period 1973 to 1980, 1981, of course, the gold price advanced from $100 an ounce to $850 an ounce. But it's interesting to note that it took 6 years of high inflation and negative real interest rates before people shook off the benign aspects of the boom in the 1950s and 60s. I'm going to suggest to you, Carrie, that it's very likely that the benign period that we've lived through for the last 40 years has people shaking off the same obvious arithmetic now that they shook off then. Government didn't print then. In this country, as an example, apparently 35% of all the US dollars in circulation have been newly created in the last 30 months.
It's amazing.
It's not as though the US economy has grown by 35% in the last 30 months. It's that they have printed 35% of all the currency that's ever been issued in the United States in the last 30 months. Governments never dreamed that they could get away with fraud on this scale. And so, yes, I think it is different. I think it's worse. At that point in time, which is to say 1967, we were terrified of the fact that aggregate government debt was 35 or 40% of GDP. Now government debt, on balance sheet government debt, is well over 100% GDP. And the off balance, and again, I'm talking about the United States, not Australia.
Sure.
The off balance sheet liabilities of the States, the net present value of entitlements. Look at me, a 69-year-old, Medicare, Medicaid, Social Security. The cost of old folks, as an example, is almost 5 times GDP. The off-balance sheet liabilities of the US government are now believed to exceed $150 trillion on a net present value basis. So yes, Carrie, things are different, not as good. Anyone who relies on conventional savings product will learn over the next 2 or 3 years that the money that they have in savings is worth less and less and less. My friend Jim Grant, famously calls the US 10-year Treasury return-free risk. If you think about the concept of return-free risk, it's not very attractive. Now, bonds have been a wonderful place to be for the last 40 years. They've been a fantastic place to be. When you cut the 10-year rate from 15.6 to 1.5, what you've done is you've increased the value of the principal on a yield basis 9-fold. It's been a spectacular bull market in so-called riskless assets, but people need to come to understand that that's over. I read the other day, Carrie, that the junk bond indexes, those are bonds issued by companies that have risky credits. The yield on the index of junk bonds is less than the CPI stated rate of inflation. The junk bonds are yielding under 5, and the depreciation of the currency is 6.5. In other words, people are lending money to dubious credits for a negative real rate of return. This can go on for a while, but it can't go on for too long. And interestingly, some of the recent weakness in gold in the United States has been due to the fact that the Fed has said that they're going to allow interest rates to rise, which has strengthened the US dollar. And I think that's going to happen.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where do you start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.